Good morning. On behalf of the Institute of the Americas, it's a pleasure to introduce you to this morning's presentation of our paper entitled China Takes the Claim in Latin America Energy, What It Means for Our Region, the United States, and Beijing. This study that was undertaken by the Institute was made possible by support from Alumbra Innovations Foundation and the generous backing of the Institute's Energy Steering Committee member companies. This morning, you're going to hear from two of the principal co-authors of the report, Cecilia Aguillon, who's our director of our Energy Transitions Program, and Jeremy Martin, who's the vice president of our Energy and Sustainability Program. We also have a discussion panel that will follow their initial presentation with Matt Ferchen, who is the head of global China research at the Mercator Institute for China Studies. Also, we have Michael Davidson, a professor at the University of California, San Diego's School of Global Studies, Global Policy and Strategy, Finally, I want to thank UCTV, the University of California Television, for co-sponsoring this program with us. And at this time, it gives me great pleasure to present our paper and share some of our key findings. Jeremy?
Good morning. Thank you very much for joining us. And definitely look forward to sharing some of the report highlights. But first, let me before we dive into the material, I'd like to also offer my sincere appreciation on part of the Institute's Energy and Sustainability Program to Alumbra Innovations Foundation for their support of our research and, of course, publication of this paper. And let me underscore the amazing support and research efforts by a whole host of people. But bear with me, I want to indicate by name some of these folks. Richard's highlighted the incredible role that Cecilia Aguillon, the Energy Transition Initiative Director at the Institute of the Americas, played in managing the overall research project and indeed writing a lion's share of the report. My colleagues, Jacqueline Sanchez, who did an amount of research, Carlos Fernandez, Rita Oliveira, Diana Rodriguez, they're all working on the Spanish and Portuguese versions, and we'll have those out probably next week. We have the English version that's come out yesterday, and we'll share that link again later. And also, I want to make sure we underscore the support of our research interns from UCSD and University of San Diego, Rolando Almada, Zoe Shu, and Tegan McGinnis. And last, but certainly not least, Joseph Mann, Matt Ferchen, and Michael Herberg were three instrumental voices in wise counsel as we worked through various versions of this report and indeed brought it to publication yesterday. And we'll hear more from Matt here in a little bit. So for those of you who've been able to already look at the report and hopefully read it, it's 40 pages, and we're not going to go through all 40 pages this morning. Don't worry, everyone. We don't have that much bandwidth or time. But, we want you to read the entire report, obviously. So indeed, what we'll do this morning is a few highlights that we'll tease out, and we'll share with you what we think are some of the messages that are consistent through the 40 pages of the paper that we'll have you read. So 4 or 5 key messages and takeaways that we want to share and foster in our discussion this morning. Traditional investment strategies. I think what we would call the China's designs on Latin America and the Caribbean's oil patch and oil sector. Then we'll turn to new investment strategies and spend a little bit more time on mergers and acquisitions and share some important developments in that sphere. China dominates energy transition. And within that, and this is where Cecilia will share a lot of her research and writing, renewable energy, but also critical minerals. And that's going to be something we'll talk a lot about this morning. And then the most recent development, which of course, in the process of finalizing this paper, we had an election and we had a new president sworn in on January 20th in the United States. And we'll talk about the Biden administration, Latin America and China, but particularly the climate change angle. So traditional investment in Latin America's oil patch. I think that this element of China's reach into Latin America is pretty well known. I think for most folks joining us today, a lot of the story over the last couple of decades, the element of China's going out strategy, the incredible amount of loans to Venezuela, $62.2 billion, according to one estimate, that were secured by oil. It's been clear for at least a decade, if not more, that China and Beijing's designs on Latin America's oil patch were aimed at energy security, energy supply security, and diversification of supplies to meet its surging domestic demand for energy. And of course, around 2010, China became one of the world's, if not the most important energy consumer in the world. And so in the going out strategy, being able to secure access to important upstream supplies and really lock in energy security guarantor through geographic focal points such as Latin America. But what I really want to talk a little bit about is moving beyond sort of that traditional designs on Latin America's oil patch and that loans for oil, which we've definitely talked a lot about in the last, like I said, couple of decades, if not around that amount of time, is this sort of evolving strategy to channel more investment or to channel their activity to continue to move into the energy space in Latin America through mergers and acquisitions. And so here's where I really sort of want to emphasize what I think is unique in our report and where we've really tried to focus some of our efforts in terms of China in this staking its claim in Latin American energy. In the last couple of years, I think you really see an effort on the Chinese to generate profits and keen interest on developing new markets for products, particularly in terms of transmission and distribution of electricity, solar power, wind, and of course, electric vehicles. There was a number that came out just recently. We were able to include that in our report that said in 2020, Chinese mergers and acquisitions in Latin America reached just under $8 billion. And that was about 25% of China's acquisitions worldwide. So Latin America figured in 2020 for about a quarter of the mergers and acquisitions that Chinese, really state-owned enterprises, transacted. In those transactions we've seen in Brazil, Chile, and Mexico, and I'll talk in a minute about some of those. Indeed, we have an image on the screen here of State Grid, and again, just as much as sort of China's designs on Latin America's oil patch is a bit of well-worn territory, and folks know, I think people have probably now at least heard of State Grid and where State Grid is figured in this, what I'm calling new investment strategy of acquisitions in gobbling up assets, particularly in the electric sector. In Brazil, State Grid's investments total $12.4 billion. And for the company, that represents 60% of State Grid's investments outside of China. Again, these are important numbers when we look at sort of this new strategy moving beyond just the development bank and the BRI kinds of loans and loans for oil. One of those acquisitions to reach that total was CPFL Energia in 2017. That was Brazil's largest private energy company. It's now in the hands of State Grid. 2019, China's Southern Power purchased 27.7% of Transelec, an important transmission company in Chile. State Grid, for those of us here in San Diego, remember State Grid purchased Sempra Energy's Chilquinta Energy, 100% of that asset, which is the third largest distributor in Chile. And another deal that was one occurring last year that received a lot of attention and continues to receive a lot of attention is a roughly $3 billion effort to acquire by State Grid Compañía General de Electricidad from Naturgy in Chile. And again, this has triggered something we talk a little bit out in the report, and that is how countries are going to manage these investments and these acquisitions of critical infrastructure in the power, transmission, and distribution markets of countries like Chile and Brazil. And also, it bears mentioning what happened in Mexico, which is, and this is a deal that we don't have the numbers for, but China State Power Investment Corporation acquired Zuma Energia late last year. And for those of you who follow Mexico, you know that Zuma has been one of the first movers in terms of private participation in the Mexican renewable energy space and owns important wind and solar assets, and indeed is one of Mexico's largest renewable energy firms. The same firm has other operations in renewables in Brazil and Chile. And I think all of this is also the perfect way to segue to what I talked about as one of our key issues in the report, and that is China dominating energy transition. And with that, I would like to turn it over to my colleague, Cecilia Aguillon, who, like I said, is I want to, again, commend for an amazing job leading this research effort, leading this report writing, and is a great colleague who manages our Energy Transition Initiative. Cecilia.
Thank you so much, Jeremy. Good morning, everyone. Yes, I will share with you some of our thoughts or research on this subject. As you know, no one is surprised to know that or to hear that China is the dominant power in renewable energy, and they are pretty much anywhere in the world today, especially Latin America. You see at least 90% or more of the products of the technologies in wind and solar are made in China. And the China's Global Energy Finance Database at Boston University shows some figures that were kind of interesting. Out of the $58.4 billion invested in energy in Latin America, this is during the period 2000 and 2019, only 15% was spent on renewables. But keep in mind that renewable energy markets in the LAC region, they're still emerging. So there's a lot of room to grow. China has been able to almost overnight create a robust manufacturing base. And I remember this because I used to be in the solar energy industry for many years. And it used to be a handful of Japanese and European companies doing business in China, selling modules. And all of a sudden, from like 2005 to 2010, we saw all these companies coming in with prices 30%, 40% below the current market price. And every 6 months, you saw prices going down all the time. So much so that Europe and the United States imposed import duties on China because they were the factories accused them of dumping. So what happened though, that in that time, like from 2010, 2014, the equipment, solar wind equipment became so affordable that markets like Mexico was able to create a robust industry or market for wind, and also even rooftop solar. So it was kind of a benefit for Latin America to have this price war waging internationally. And after that, the auctions became very in vogue in Latin America, starting with Mexico in 2015, where prices of energy that came from the auctions, prices of the PPAs or power purchase agreements, were so low that it blew the expectations, and everybody thought it was not possible. But the next auction that happened the year after, the price was still coming down. It just feels that there is no bottom, really, that prices continue to decline. And that has benefited also Argentina, Chile, Brazil, and most recently Colombia. So all this equipment is coming in from China, but now the Chinese banks are getting involved, because when any normal investor sees the prices, the contract prices and the conditions, and they think, oh, this is not possible, it's not financeable. So now we need financing. So now here comes China banks financing projects in the region. And something very interesting happened in Colombia, where Colombia had their first auction in 2019. And the prices of that auction came in even lower than the ones in Mexico, below 3 cents. Those prices were interesting, but what was even more so was that the contracts were in the currency, in the local currency, not in US dollars. Everywhere you see contracts for PPAs in US dollars to give confidence to the investors. In this case, it was a kind of a risky proposition, but paid off for one entity. It was the manufacturer of solar panels that won pretty much all the solar portion of the auction. And of course, what they gain in return, maybe the deal was not as good as a normal investor would envision, but they will be shipping panels, they will be shipping equipment, and in some cases they bring Chinese workers and Chinese engineers, and they engineer the project, etc., etc. So there are other benefits that a normal company would not get, and this is it's quite interesting that you have the national government, the provincial government, and the banks loaning you money. So you don't see anything like that in the world, and you can see how easily they became like the dominant force in this space. And Jeremy talked about the M&A deal in Mexico with Suma Energy. What's interesting to note is that deal occurred just when renewable energies are having a hard time to get deployed in Mexico. So why would a company buy a renewable energy entity during this time? It's interesting. But we don't stop there, of course, because now the new emerging technologies for decarbonization are embedded in the batteries. So electric mobility, stational batteries for homes and buildings. And China is already paving its way into this market and staking a flag there as to be the leader. We see that because they are shipping electric buses to cities like Chile, Argentina, Brazil, and most recently in Colombia. And this is happening when the EV charging infrastructure in developing countries is not really there, and the EV cost is not really competitive with traditional vehicles. So it's good for the countries, of course, because they will be able to get new technologies, but we just have to scratch our heads as to how is this happening. Well, so the dominance is also felt in the batteries I mentioned. There is a report by the Benchmark Minerals Reporting Agency and Market Intelligence for lithium-ion batteries. They show that the largest producer of lithium-ion batteries that go into the cars and into the buildings, in the batteries for buildings, China has 63% share of the world production. The United States is not even a close second, it's a distant second at 14%. And Chinese companies are pretty much active throughout the entire value chain with the battery production. So this is a chart that I took from a report that the Institute of the Americas and the Payne Institute at the Colorado School of Mines published last year about battery production and the role that Latin American countries with lithium deposits play or aspire to play. I apologize for the quality of this graph. I took it from the paper. Here it shows where this production is being done, and then the steps. So number one is lithium deposit to concentrate. The number two column is lithium refining to battery chemical. Number three is cathode manufacturing. Number four is battery cell manufacturing. Number five is battery pack and EV manufacturing. Number six is EV market. So you can see the United States has California, Nevada, and North Carolina. Three states pretty much play in all of the value chain except for the number three, which is the cathode manufacturing. So, but Latin America, you see where the oil deposits are mostly Argentina, Bolivia, and Chile. Chile and Argentina are pretty well positioned in the value chain, except they don't have a market and they don't produce cathode either. But Bolivia, that is one of the largest, believed to have the largest deposits of lithium in the world, it's only has aspirational goals, but we haven't seen them playing in that space. Yet you go to China, in China it's actually all over it. They are everywhere in the space. So it's interesting too, because now there are a lot of billions of dollars from Chinese state companies that go to acquire high stakes in the minings, and they get, as a result, to secure production and supplies of the lithium that then go to China. A lot of the countries that have the deposits, they are concerned because they want to play in the space, but they can't. So what they do is, all the extractions go back to China to be processed, because the processing is intensive, is capital intensive, and it's not really cost effective. In China's game has been all along to reduce costs and ship and export. So it is not really. I don't see a way that we can get manufacturing of all these processes in the countries that have the lithium. So something is going to happen in countries. They're protesting in Chile and Bolivia about the mining, and even Mexico. They were moving legislation to nationalize lithium because they were concerned about just being the provider of the raw materials. So at the end of the day, each country must balance its desire or need for investment against the impacts of pollution of the ecosystem, and also like what do they gain? Do they gain more than they give? And the same for China, right? They are very keen on, a lot of the countries in Latin America are very keen on continuing to export the products. So China offers a great market for raw materials and for even for food products. And but their investments and the trading partnerships come with costs. So as a condition to investments, you have to use Chinese products, and in many instances you have to bring Chinese personnel to develop the projects. And also there is the issue with Taiwan, condition to have the countries recognize Taiwan as part of China, and things like that it's always been weighted. So now we go to the United States, that has been one of the principal trading partners in Latin America, and what is going on there. Of course, they have been concerned about the growing presence of China, and particularly the strong control on minerals. It is believed that China controls like 80% of the critical minerals that go into high technology, defense technology, electronics, etc., telecommunications, and of course batteries. And the U.S. really want to put a stop to that. So in 2017, then President Trump issued an executive order with a plan to reduce the U.S. vulnerability to these disruptions in the supply of critical minerals, and included cooperation with allies like the EU, Japan, South Korea, to counterbalance Chinese dominance. Peru and Brazil participated in the initiative, which also promotes sustainable mining. Another initiative that came out recently is called America Crece, which is translated into growth in the Americas. And this is to attract investments in energy and infrastructure in Latin America. And the idea is to encourage cooperation and sustainable practices. Well, these programs obviously are relatively new. And now we have a new president in the White House. So the question now is, what will the United States do? Joe Biden, he comes in as the new president with a host of issues, domestic issues that he needs to deal with. So how will he treat the China-US LAC relationship? And for that question, I will give the mic back to Jeremy Martin, who will take us to the finish line. Jeremy, back to you.
Thank you, Cecilia. Well, indeed. So this is obviously, we'll end here with perhaps one of the more critical elements to continue to assess. We're not even a month into the new administration. Cecilia talked about some of the U.S. government efforts leading up to January 20th. Let me just tease out what I think is an important area to keep a focus on. And look, we had a call yesterday between Presidents Biden and Xi that seems like the readout was a bit perfunctory, but it indicates some of the typical talking points. And in there, of course, is climate. And that's where I want to focus this last couple of minutes before we have our discussion. And I think we all know that the Biden administration arrived during the transition and now, of course, in office with rightfully gaining a lot of headlines about its efforts on climate. And with that, on day one was the reentry into the Paris Agreement. That was an important shot in the arm, I would suggest, for the international community combating climate change. It also emphasized, as we all had talked so much about, the Biden and his foreign policy sort of sphere, the emphasis on multilateralism. But I think also we anticipated and have already seen a whole slew of executive actions, executive orders from the president, day one on Paris reentry, but a whole slew, like I said, of executive actions that really did place combating climate change at the center of every part of the national security, economic, and of course, international affairs and foreign policy of the administration. Indeed, I want to read one of those, some language from one of the executive orders, because it's particularly important for our conversation about the Biden administration, its efforts in Latin America vis-a-vis China. And in one of the executive orders, it required all agencies to develop strategies for integrating climate considerations into their international work. So we're obviously going to move beyond just the State Department, the Development Finance Corporation, the sort of traditional areas where we saw the U.S. government focus. And I think, we sometimes from D.C. hear this whole of government concept. And I think that's indeed what this executive order speaks to with regards to climate and, of course, in terms of how to confront China, in our case, in Latin America. Further, the Biden administration, some of its preliminary investment strategies has talked about emphasizing clean energy, resilient and sustainable infrastructure. They want to drive innovation. They want to deal with confronting poverty and confronting corruption issues. And of course, deploying support the deployment of increased renewable domestic sources of energy across the hemisphere. And as they said, to begin to construct a secure middle class and democratic forms of government from Canada to Chile. I think it's also important when we dial in specifically on the role of Biden's administration and how we see his goals and objectives in Latin America play out with regard to China. There has been language, and it's all within quotes here, and we obviously in the paper get a lot more deep into this conversation, but the attempt to rally a united front to hold Beijing accountable to high environmental standards, and it's in this case Belt and Road Initiative infrastructure projects. But the emphasis and the objective on, trying to make high carbon and carbon intensive kinds of projects, financing and infrastructure, the goal and objective at this point really to counter those and make them more expensive and diminish their development in the ensuing years in Latin America. There's also an interesting, in part of the readout of the call yesterday, we saw the affirmation of a potential U.S.-China bilateral agreement on carbon mitigation or an effort. I mean, there's a lot of I's to dot and T's to cross in any kind of bilateral agreement in that regard. But I think it's also important, again, to come back to this multilateralism concept. And something else that the Biden administration in the transition has talked about, and even more recently, is using fora such as the G20, international fora, not just the Paris Agreement construct, but something such as the G20 group of nations to end all export finance subsidies of high carbon projects. And again, trying to not just offer a policy of negation, but to also offer a policy of support in terms of alternative development financing that's aimed at low carbon energy investments. That's going to be critical, right? Because as we know, Latin America has been hammered by COVID-19 in economic terms, some of the worst downturns in the region's history. So this element of supporting and financing deployment of clean energy and combating climate change is just as critical as, I would suggest, speaking to multilateral approaches at the G20 to reduce carbon intensity subsidization. So a final couple of points that I think are extremely important, perhaps at this moment more so the first one domestically in the U.S., but I think we'll see expressed and have seen expressed in some of the language of the executive orders that will ripple into the foreign policy sphere. And that is the issue of climate justice and the issue of adaptation. Now, climate justice, I think is something that has been at the forefront of the Biden team. And if you look not just with the appointment of someone like John Kerry or Gina McCarthy, but if you look at the Council of Economic Advisors, if you look at some of the other folks on his team in foreign policy and economic and national security, this is absolutely going to be something that's going to be emphasized. It's been emphasized in one of the early executive orders. that I have some quotes here on the screen. And we'll see that, I again suggest, playing out in the region, perhaps not immediately, but I think it's going to continue to be emphasized. And then I think it's important, in Latin America, particularly in the Caribbean and Central America, we saw the horrendous impacts of hurricanes last year. We see increased forced migration because of climatic events and incidents. And so how can this administration really, again, in this moment of economic downturn, support resiliency and support a more robust infrastructure or resilient infrastructure in the region that adapts to this ever-changing and increasingly dramatic climatic events that we're seeing in Central America and the Caribbean and Mexico in particular. But, droughts and fires and hurricanes and tornadoes are not limited to just those areas, perhaps more pronounced in those areas, but certainly critical everywhere. So I want to be able to have our expert commentators share their thoughts. That is the 20-minute summary of a 40-page report. And let me throw it back over to the Institute of the Americas President Richard Kai, who will take it from here. Thanks so much. And thanks to Matt and Michael for joining us. I look forward to their comments. Richard.
Jeremy, Cecilia, thanks so much for your excellent presentation. At this point, I want to reintroduce Matt Ferchen, who, as I said, is the head of global China research at the Mercator Institute. Matt is an expert on Chinese economic statecraft and that country's brick and road initiative in the developing world with emphasis in Latin America. So he comes with a great deal of knowledge and perspective that will, I think, enrich this conversation. And then we'll follow up with Michael Davidson, who, as I indicated, is an assistant professor at UCSD School for Global Policy and Strategy, GPS. So Matt, take it away.
Great. Well, thank you so much, Richard. And thank you to all of the organizers of today's event and to Jeremy in particular for asking me to be involved today as someone who was involved in the review and some feedback of the original report. It is really a great joy to see what you've come up with here and been able to incorporate a lot of detail and really important insights into this report. So I'm going to focus my comments in three areas. One of them is this sort of distinction between traditional and new areas. The second one is the emphasis on the U.S. role and sort of political risk issues that Jeremy was just discussing. And then the third area, sustainability issues in global comparison. So let me begin with a discussion of this traditional versus new sectors. This is something that I think comes up a lot in the broader relationship between China and Latin America. And this is in large part because the relationship fundamentally continues to be about the export of raw materials, largely from South America, to China, and on the Chinese side, the export of finance and more finance investment, but also higher end manufactured products. And the real question here continues to be, even as we look at sort of the distinction between traditional and new sectors and the energy transition that the paper mentions, is to what extent will the region be caught up again in commodity cycles that we've seen in the past? Again, there was a really important cycle at the beginning of the 21st century. And the question mark now is on sort of where does that leave the region, both in fossil fuels, but also in this energy transition sector. So just pointing out that sort of obvious but continuing important area. The second thing I'd like to mention here in the area of traditional versus new sectors is the emphasis that China is going to continue to place on moving up the value chain. Again, whether that is in traditional or fossil fuels that the paper points out, or in new sectors in energy transition and renewables and critical minerals. China is going to present its new 5-year plan next month at the 2 meeting session in March. We already have some indications of where that's going to go, but I think it's fairly clear that China is going to continue to put a lot of emphasis on innovation and technology. So the question then is, what kind of challenges and opportunities does that present in these areas that the paper highlights? Again, in traditional or fossil fuels, but also in energy transition. So China's not going to stand still on anything that is brought up in the paper and anything that matters in this area of energy cooperation, investment, finance, trade with Latin America. So this is just to point out that Latin American governments, businesses, NGOs need to understand that emphasis and try to harness it as best as possible in terms of the potential for the region, but also to minimize risks. Let me move on to my second set of comments then, which is focused on these issues of the U.S. role in the region and political risk sort of analysis and management. The paper certainly brings this up, but as someone who spent a lot of time and energy looking into the China-Venezuela story, just like to note that this Venezuela story as it relates to China's involvement in oil and lending is not going to go away. I would say it's been on the back burner in global discussions about China's role in debt. A lot of those discussions are focused on Africa, something I'll talk about more in a minute. But this is just to say that the Venezuela story is going to continue to be important. It's obviously important to the people of that country and neighbors and to the hemisphere. But China's role there is extremely important, has not been resolved, whether we think about its role in the oil sector there or in lending and sort of the future of the country and the role that the United States is going to play there. This is mostly a bunch of question marks for me at this point, but we'll have to see whether or not this comes on as a sort of focus of the Biden administration's policies in the region. Let me spend a couple minutes then just talking about how I see that playing out. Again, the report brings this up. And some of this is just echoing what Jeremy has already mentioned. I think it's really important. Clearly, the Biden administration, sort of harking back to the Obama administration, is going to, I believe, put a lot more focus on energy and energy technology in the region, with a special focus, I believe, in Central America and the Caribbean. And so a lot of this will focus on sort of how to either be competitive with or counter the proposition that China makes in the region. And I think a lot of this will focus on these alternative energy issues. And here the question then is sort of what will the competitive proposition be from the US? I think a lot of it will be on energy technology. Yet I don't think we're going to see any kind of major proposition of cooperation between the United States and China in the region. It's mostly going to be about the US positioning itself. And I think a lot of that's going to be as a sort of partner in providing more quality, lower price technology for energy generation and use. On the rivalry issue, I think it is certainly worth all of our attention and something that the paper brings up to look more at the deal that was negotiated in the final days of the Trump administration with Ecuador and the Development Finance Corporation. I am personally skeptical that this is going to be a model for the region. I think this was something that was put in place by members of the Trump administration, a lot of emphasis in that deal on how this is a way to combat China's predatory lending, a lot of language similar to that which was used related to the debt trap diplomacy. This was all signature Trump team policies, and I think that there will be different proposition on the table. Not sure how that will play out, but I think this is a really important case. I just don't think it's going to be necessarily an example in its details of how the Biden administration chooses to go forward. Finally, in this area of political risk and the U.S. role, I think it is worth all of us watching how China assesses political and economic risk in the region, given sort of maybe a different kind of a renewed U.S. Competitive position in the region, and probably more attention on the region from the Biden administration, in particular in these areas of energy. And then let me make a final set of comments then about sustainability and global comparison. The report does an excellent job of going into many of the different details of the specifics of the China-Latin America energy relationship. And that, I think, is something that we should all, I think we should laud the detail that is provided for the specifics of the China-Latin America relationship. But I would just also point out that many of the issues that are brought up in the paper are relevant for other regions. And let me just quickly go through the three areas where I think there's relevance here. First is in this area of debt traps and lending transparency, which the paper points out. This is an extremely hot topic in other regions as well, in particular in South Asia, Southeast Asia, as well as Africa. And there is an extremely high level of interest in these issues of debt sustainability in particular, and of sort of understanding financial flows in particular from China to developing country regions. Again, a lot of emphasis on Africa and South Asia, and trying to track these flows. And I would just point you in the direction of some of the work that's being done by academics and international institutions and governments to try to understand this in Europe and elsewhere. Second area is governance, influence, and leverage that the paper brings up here. So what kind of leverage or influence is China able to achieve as a result of deeper trade, investment, and financial relations, especially as it relates to energy? There is, again, a high level of interest in exactly these issues in areas like Southeast Asia, but also sort of pointing to the limits of how much leverage China is actually able to gain as a result of deep interdependence, even with its neighbors. So this is just pointing you to researchers in particular who are doing really good work at this sort of level of investment and finance, as well as influence. And then pointing to how to manage some of these issues of economic interdependence and influence. The EU in particular is rolling out investment screening mechanisms across member states. And I think there might be examples here of that process, and then also the details. And lastly, in terms of environmental and local community impact, the way in which governments, firms, and NGOs in Southeast Asia and Africa are emphasizing these exact same issues, and the way in which the development community in Europe and elsewhere is also focused on trying to improve the environmental and local community impact of Chinese investment and financing in all of these areas. So I will wrap it up then with just two last very quick comments. The first is the importance of this cross-regional lesson sharing. So I hope this report feeds into some of those discussions. And lastly, just the importance of, for all of us everywhere, of increasing our knowledge about China. It's a long-standing challenge and goal, and this paper just emphasizes the importance of that. So thank you, and I look forward to the discussion.
Matt, thank you so much. At this time, it gives me great pleasure to introduce Professor Davidson. Professor Davidson is an expert on Chinese investment in electricity markets in the developing world, and I think he's going to offer us a great perspective on the key findings of this report. Professor Davidson?
Thank you, Richard, and thank you, Jeremy and Cecilia, for walking us through this really interesting report. It's a very welcome and detailed look at the ongoing changes of China exerting its influence globally. And I'm going to focus on two aspects that were highlighted today, the new investment strategies and energy transitions. First off, we've been hearing a little bit about the Belt and Road Initiative. This was launched in 2013. There's some difficulty in pinning down exactly what's in BRI and what's out of BRI, but you can naturally think of it as an extension of the earlier going out strategy, which was an opportunity for China's large state-owned enterprises to address their domestic production overcapacity and then become national champions. Now it's promoting Chinese technologies and standards and also strengthening economic, political, and increasingly military influence worldwide. An important element of what the BRI gives to these countries is that it's not only bringing technology, it's also bringing equity, and it's also bringing export finance. And those are really key issues for very expensive infrastructure projects. So I thought I'd start with the solar question. I think solar is just a really interesting example here. So Mexico and Brazil are now in the top 10 countries of China's exporting PV. So this is surpassing Spain and Germany, which were the earlier leaders in PV adoption. And now we're seeing that Latin American countries are really benefiting from that early learning. But there's almost no Chinese-owned overseas PV manufacturing capacity in the region, as was pointed out. These are still largely concentrated in Southeast Asia. Now, that makes sense given the other economic integration in the region with China. But China's cost is now making this very, very attractive for meeting LAC renewable energy goals. And I think if folks are interested or concerned about what that kind of dependence means, you can really look to India as a potential litmus test as to how easily a country can indigenize solar PV after the costs have really come down. It's going to be difficult and expensive, and we're not sure yet what that's going to look. And it's also important to recognize that if you look across the solar value chain, there are much more jobs in installation, balance of systems maintenance than in the direct module production itself. And so the globalized supply chains and the learning are the reason that we're talking about unsubsidized PV tenders at the moment. Now, if we think about China's power generating capacity investments abroad, you usually hear about coal, gas, and large hydro. Now, we see a lot of gas and large hydro in Latin America. Coal, which is by and far the largest criticism of BRI and environmental grounds, is not an issue in LAC. So that's an interesting distinction. I wanted to talk a little about UHV transmission lines. So this is I've been following China's domestic energy transition for some time. China has the most of ultra high voltage transmission lines in the world, around 30 now, and the longest line in the world, surpassing Belmonte just recently. And it's really a success story of China's grid companies, in particular State Grid and industrial policy. So State Grid has been actively moving overseas as some of the projects that it was building within country are now drying up. And the report points out very importantly that 60% of that activity is now located in Brazil. All transmission lines are going to be controversial regardless of who builds them. So it's really important to keep that in context. Also, there's a lot of foreign ownership and distribution companies in Latin America. So for example, Chile, State Grid's purchase of the distribution company was actually from a Spanish company. And there's still an Enel, an Italian distribution company in Chile. So there's a lot of foreign influence in this distribution level and transmission level grid companies. And an organization affiliated with State Grid, GuideCo, is now eyeing much larger transmission grids abroad, trying to develop a lot more of an emphasis within the global community to build much more transmission lines. And State Grid would be very well poised to take advantage of those. One last comment before I get to the questions here is on EVs and batteries. So China has really innovated in the EV space, and it's primarily from private companies outside of these large state-owned joint ventures. So BYD, NIO, and others. And these have been really helped by domestic and local government procurement and subsidies. So this is really developing off of a local demand for those products. And 99% as a result of electric buses in the world are now made for and used in China. I'm not sure if the Columbia deal changes those numbers, but it's still overwhelmingly within China. And so these EV manufacturers are now in a position where they could set up shop in destination markets if those markets are big enough and if the governments allow them. We have an issue in this country about whether or not we want to allow BYD to build electric buses for our municipal fleets. And on the battery side, China is indeed the largest has the largest production capacity of lithium batteries, but the tech leaders, the ones that have the most patents and that are the most innovative, are really Korea and Japan. And they've been setting up these battery mega factories in China. Some of the most advanced ones, like the ones that are supplying the cylindrical cells for Tesla's models, are coming from, for example, LG Chem, Panasonic. China went big into a different chemistry that doesn't require cobalt. And there's some potential innovations on that front that could make it more suitable for medium range EVs. But we know that we're going to need cobalt and lithium and some of these other advanced technologies for EVs going into the future. And so that really begs the question of whether or not China can really catch up to that level and develop those new generation of batteries. And then finally, what would it take for LAC to develop a battery hub? There's a lot of questions around, where should you locate within this supply chain? Well, you can look to the question of why do international suppliers locate in China? There is a huge market. The demand, China sold 1.3 million EVs last year. Europe was just slightly larger than that, the entire continent of Europe. There's demand, there's infrastructure, and there's labor. There's a lot of components that make that very attractive to build those factories, those mega factories in China. And so it's really a question about whether LAC can develop those kinds of promising conditions to develop a battery hub going forward. So again, really interesting report, and I'll save the rest of my time for questions from you all. Thanks.
Thank you, Michael. At this time, we're going to take questions. We're not going to be able to get through all of the questions. We've got over 20 questions that have come in. With that, we'll start with the first question from Nick Puga, who's asking about whether Mexico's AMLO administration may look to China to counteract U.S. pressure to preserve its electric sector restructuring. Jeremy, Cecilia, you want to take that question on?
AMLO is interested in indigenous, local production, and China is not really buying much oil from Mexico or investing in oil in Mexico, but they are investing in lithium, for example, and the purchase of Zuma that Jeremy mentioned, Zuma Energia. So I don't think so. I think that they will continue to focus on the renewables and what lithium for now, but they purchased Zuma, so that means that they're coming back. They have hopes for renewable energy. Jeremy?
I would just add that the domestic situation with regards to policy and regulation of the energy sector in Mexico is so fluid and so counter to any kind of international participation, whether it be from China, the U.S., anywhere. I mean, you have a fervent effort to make CFE the only game in town in the power market.
Thank you, Jeremy. We've got another question from Danny, who asks about the oversized amount of external debt held by Latin American countries from China, and wanted to know if we could talk to the point of debt leverage that China has over countries. Matt talked about this a little, but there's the issue in the report about China's hidden debt that is not truly transparent to the international community. So many creditors don't know fully how much is being lent to these countries. So Jeremy, you want to take that question?
Well, I would just commend people to read the report. I would echo what you just said about there's a lot of lack of understanding because we just don't have access to some of the details. I thank Matt for emphasizing what that means vis-a-vis Venezuela, particularly as we try and manage that failed state situation there. So I look forward to seeing what Matt thinks about that question. Because I think, Matt, you've looked a lot more at the role and leverage of the quote unquote debt, right?
Yeah, it's just to say this has not been resolved at all. It's interesting how in the rest of the world this has become a big issue, especially China and Africa. Obviously, in the wake of the coronavirus, debt is also a major issue. So lots of discussions about China's role in debt refinancing. The fact that China is increasingly focusing on bilateral negotiations, very difficult to get it involved in multilateral negotiations. So that includes difficulties with Venezuela's partners or neighbors. The only other thing I would point to is the good work that the folks at the Inter-American Dialogue and Boston University are doing, showing that the policy bank lending is dropping off, but then there's all kinds of alternative kinds of commercial and other firm lending happening in place. So the lending flows are switching, but there's still going to be lots of questions about sustainability.
Thank you, Matt. We have a question from O'Farrell from UNICEF regarding China's investment in hydrogen technology in Latin America. I don't know if anybody has some comments on that front.
Well, the hydrogen, we haven't seen much, to be honest with you, in the research. It seems to me that the green hydrogen is really being led by Europe, and now the US is getting involved in.
Maybe Canada, is developing a national hydrogen strategy. I think hydrogen is definitely one of these questions, where it fits in. And like Cecilia said, we have this rainbow of colors of green, blue, gray, hydrogen, and what's going to happen.
We have a question from John Jacobson, who asks if we could address China's presence in Guyana. Jeremy, you were a co-author of a recent report on Guyana. Do you want to take that question?
Yeah, so I mean, let me just focus on sort of the oil patch, because that's where there have been some other mining. There's some historical, and I think perhaps the questioner is also interested because there was a bit of a kerfuffle in the last couple of weeks to the point of what Cecilia mentioned in the One China, and this issue that's been particularly important in the geopolitics of Central America and the Caribbean, and that is mainland versus Taiwan and how to manage those relationships. And so that's something we've seen playing out in Guyana lately. But in terms of the oil patch, I think we've seen something that sort of underscores the desire for China to continue in the going out strategy, what I would call securing supply, diversity of supply, guaranteeing energy security on the back of a variety of projects. And to that point, CNOOC, one of the major Chinese state-owned enterprise national oil companies, has a 25% stake in the Stabroek block and project, which is the one that when you hear about oil production and the boom in Guyana, that's really what we're talking about today. So as that ramps up and people expect Guyana to become one of the top 3-4 oil producers in the region on the back of these discoveries, think about CNOOC with 25% of that project.
Okay, we've got another question from Tio Riquez, who asks about U.S. competitiveness and talks about attempts in the past to invest in Central America and Caribbean. He is wondering about what the Biden administration is going to do better to improve the possibilities of investment by private entities, given that we haven't done such a great job over the past 40 years.
I was lucky enough to take a trip also in the Caribbean in 2018 when the Trump administration was really ramping up some of the emphasis on sort of alerting governments and businesses in the region to concerns about China's role. And in discussions with U.S. diplomats, they were searching around for exactly answers to this question of, instead of sort of complaining or saying that China is a bad actor, what do we have in place? And I think that's what's on the agenda. I mean, I think that the Biden administration in particular is going to have a few people that have been thinking about this for a few years. But it's easier said than done. It really requires coming in with alternative vision, but also money, technology, ways of putting your money where your mouth is when you complain about what China's doing. So I'm also eagerly waiting to see what the team comes up with when they say they're going to be more competitive.
I think we've run out of time. It's 10 o'clock. I want to thank everyone for their participation. As I mentioned, we're going to work to respond to the remaining questions. I want to thank our panelists, Matthew and Michael, our co-authors, Jeremy and Cecilia. I want to thank Alumbra Innovation Foundation for their generous support, as well as our Energy Steering Committee. And finally, I want to also thank UCTV as a co-sponsor of this program and our Hemisphere in Transition webinar series. Thank you, everyone, for attending, and we look forward to continuing discussions on this issue and others.